On Wall Street, some investors are concerned about a possible trade war amid the threat of higher tariffs. One America's Salvi has more on why global markets might remain calm through the uncertainty.
Despite the outcry by those warning of a potential trade war, there appears to be nothing but peace on Wall Street. Last week, the president threatened global commerce in a way no modern president has before, in an effort to make trade more fair and reciprocal for the U.S. On Tuesday, the White House imposed 25% tariffs on $50 billion worth of Chinese goods. On Thursday, Canadian Prime Minister Justin Trudeau said NAFTA talks were stalled following the U.S. demand for a 5-year sunset provision. And by midnight on Friday, Commerce Secretary Wilbur Ross announced and imposed 25% steel and 10% aluminum tariffs on Canada, Mexico, and the European Union. The international response from allies was fierce. Trudeau prepared retaliatory efforts that match those of the U.S.
The American administration has made a decision today that we deplore and obviously is going to lead to retaliatory measures, as it must.
Mexico announced it would place its own tariffs on American goods. The EU readied tariffs on motorcycles, bourbon, and other U.S. products.
This is a bad day for the world trade. What they can do, we are able to do exactly the same.
Yet through all the chaos, Wall Street appeared unaffected. After the president rolled out his steel and aluminum tariffs on its 3 allies, the S&P 500 retreated 0.7%, but those losses were recovered the very next day. Overall, stocks were flat on the week, but the Nasdaq is up 9% this year. Generally, analysts say tariffs are bad for the economy and could paralyze investment decisions. But many experts credit the calm to an atypical president, who may be using the threat of tariffs in order to strong-arm more favorable trade deals.
We've developed an experimental policy here. Low tax rates, lower regulations, no punishing business. Let's reward success. Take a rip at the ball. That's American capitalism, entrepreneurship.
When tariffs are announced, stocks appear unaffected. But when Treasury Secretary Steven Mnuchin announced a hold on the tariffs on May 21st, stocks soared. The Dow surged more than 350 points and topped 25,000 points for the first time in 2 months, while the Nasdaq and S&P 500 climbed 1%. Despite the Chamber of Commerce estimating that trade policies would threaten as many as 2.6 million jobs, the GOP tax cuts are countering those fears by increasing consumer confidence and thus spurring more jobs and economic growth.
When you're thinking about the overall economy, it's not just the trivial increase in product prices, it's also the increase in employment and the strength of the economy overall.
Strangely enough, the economy could probably use a cooling off period. The economy was on the verge of overheating from the tax cuts, and the tariffs have eased fears of inflation that would have forced the Federal Reserve to aggressively raise interest rates.
We're hopeful that this, over the long term, helps ensure support for an open economy. That's at least what I would hope would continue to happen. But the near-term effect on the macroeconomic outlook it doesn't change my view.
This week will help shed light on how businesses and investors are responding. On Tuesday, a powerful lobby that represents major corporations, known as the Business Roundtable, will announce the results of its second quarter outlook. The president's tariffs will likely be front and center. The member companies employ more than 16 million people, with about a third of their sales coming from outside the U.S. While the group traditionally defends free trade, there won't be much to complain about so long as investors are happy. Salvi, One America News.
Want to see more videos like this? Click on the link below and subscribe to One America News on YouTube, and call your cable provider and kindly demand that One America News is added to your lineup. Call and subscribe today.